Hello and welcome to a very special podcast series, Unusual Suspects. I'm your host, Gaurav Chaudhary. This is a series about unraveling stories of entrepreneurs, investors, and businesses that are disruptors, yet not in your face. Their disruptions have consistently delivered on the purpose and the mission they embarked on. Their values are as strong as the mission. While they are ruthless in pursuing their ambition, they don't stray from being leaders who are not just admired for the vision and relentless pursuit, but also for how they are building an ecosystem of believers who consistently push the boundaries. They allow principles to take precedence over ad hocism. For them, profitability is as important as scale, creating and leading new categories and innovations. In each episode, I speak to one such leader, talking to her or him or them about their businesses, lives, inspirations, interests, challenges, pivot moments and turning points, successes, failures, agonies and ecstasies, and of course, frustrations. It is as much about their personal life stories as about their entrepreneurial journeys. Unusual Suspects streams on Earshot.in, Spotify.com, Apple Podcasts, Google Podcasts, moneycontrol.com, and a host of other podcast streaming platforms. For this episode, I'm delighted to have Archana Jahagirdar, Managing Partner, Rukam Capital, an early-stage, consumer-focused VC fund. She is one of the solo general partners and amongst a handful of women founders of venture capital funds worldwide. Archana believes in Indian markets and the vast potential it holds not just in catalyzing demand and supply, but also in creating wealth and opportunities for the Indian audience. With the same belief, Rukam Capital was founded in 2019 and has since invested in 18 companies across a range of sectors, including Sleepy Owl, Godesi, Beko, Pilgrim, Cure Foods, and Yoho. With more than 25 years of experience, Archana now holds a board observer seat in select portfolio companies. Prior to starting Rukam Capital, she worked with Indian Angel Network. Archana holds a bachelor's as well as a master's degree in literature from St. Stephen's College, Delhi University. Great to have you on Unusual Suspects, Archana.
I am an unusual suspect. Thank you for having me, Gaurav.
Okay, your career spans three distinct phases: as a journalist, a writer, and a commentator, as a founder, and now as an investor. The lessons learned and unlearned may have shaped your thinking, approach, and philosophy as an investor. Take us through this.
So I think there's a lot of commonality in everything I've done, in the sense that as a writer, you question, you ask the right questions. Why should something happen? What's the story? Why should it be of interest? I think investing, early stage investing, is pretty similar, where you ask the relevant questions. Who is this product for? Should it exist? Is there a need for it in the market? At what price point would it be required? So you are asking the questions. And when you ask the right questions to founders, you hope to get the right answers. And that's how you build your investment sort of thesis. As a founder of Rukam Capital, and I was a founder in an earlier avatar as well, you learn to take a lot of risks. You learn that it's not easy. A lot of the judgment calls that you have to make on a daily basis are based on imperfect information and ideas. And you still have to be able to lead and live with a lot of uncertainty around you, which is suitable to be an early stage investor because you're surrounded by imperfection and uncertainty.
Right. India's venture capital scene has always been a predominantly boys' club. You are among the few very pleasant exceptions. How do you see this? Why, according to you, are there so few women GPs in the Indian VC space? This trend probably is not just limited to India. This appears to be prevalent worldwide too, isn't it?
So, For people to hand you their capital, because typically VC is a blind pool of capital, which basically means that somebody is giving you their money and they trust you to make the investment decisions. They are not involved in taking those decisions for their own money. Now, you can imagine that's a very, very hard thing to do, to be able to trust, in that sense, a stranger. To take important decisions with your capital and where the capital doesn't go down to zero. An early stage is a very high risk, illiquid asset class. So it's not something that, like you can trade in the capital market. So it's not easy to sort of exit. So, and the financial world typically and for the longest period and even today is controlled by men. So men have a long and easy relationship with each other. And ultimately, trust is the most important factor that it takes for a limited partner who, gives you their capital to invest. And that comes with time and relationship, which is why women typically get shut out of, starting their own funds. But there are some LPs in India and overseas who are now looking actively to support women managers and are willing to take that leap of faith and say that, okay, maybe this relationship has not been as long as, let's say, some of their relationship with other money managers. And they're able to, make that crossover. But it's going to take some time. I think women have to hang in there in their sort of careers, especially in the financial services, to be able to attract enough pools of capital consistently.
When did you decide to take this leap of faith? Because this has been it probably would go down as a giant leap of faith in your entire career, probably the biggest one. And when did you decide to do that, and how did it come about?
So I think all entrepreneurship, including mine, comes from, I think, naivety and lack of enough information. So I, as a writer, you're an observer. You really see, action getting played out. And sometimes you arrive on the scene after the action has sort of played out, right? As an investor is when you get possibly closest to seeing something as creative as a business being built from ground up. So when I started and I got interested in the early stage ecosystem, I originally wanted to be a founder, and I wanted to be a founder of, I had some ideas in the tech space, but because I don't come from a tech background, I didn't have a tech co-founder, so some of those ideas didn't see the light of day. But I think I've always been entrepreneurial, and I've always wanted to, in a sense, be able to control my own destiny, which I think you can only do as a founder. But the genesis of Rukam Capital really was that I was trying to set up an accelerator. I wasn't trying to set up a fund. And I realized very quickly that founders didn't want gyan without money attached to it. So when the market tells you and gives you a very clear signal, you take it. And that's how we became a fund.
There's a certain, if I may say so, Indianness in your portfolio. Tell us why is that, and what is the philosophy behind this?
So Rukam itself means gold in Sanskrit. And the idea was that India is an underserved market when it comes to consumer goods and services. And if you look at some of the bigger brands that exist in India, which serve the Indian consumer, these are typically multinationals, even though some of them have been here for many, many decades. And the Indian consumer is changing very, very rapidly. And the Indian consumer is much more aspirational. And as consumers change, there's always an influx of new brands, new ideas that do come out. And I think it's important, if you look at every country, every mature economy in the world, you will see that their markets are dominated by their own domestic brands, not so much by multinational brands. So it's important that the Indian consumer is served by Indian brands because, we understand the Indian consumer the best because we are Indians. And that was the entire logic, that we are underserved. And it's a great, great white space to go after.
Your focus is the consumer product space, but I'll come to that later. I would like to know your views about the D2C boom that is, sweeping India, the direct-to-consumer, and particularly in the tier 2, 3, 4 cities and towns where consumers starved of brands are actually willing to experiment with products. So D2C brands have been able to cater to consumers all across the country, across all geographies, much beyond the glitz of metropolises. Is this a bubble, or do you think it's here to stay?
Look, in India, given the size of this market, and like you said, consumers are starved for brands which they can trust and love, and therefore continue to engage with them in a long-term sort of way. I think the issues are in D2C are that there are gatekeepers. So the cost of getting to a consumer is prohibitive for an Indian brand today. And I think that's the limiting factor. It's not to say that the Indian consumer is not willing to spend, but the discovery has to be better, easier, cheaper. And I think the Indian brands are still trying to figure out that what would be the best way to, and the most cost effective way to reach the consumer. Today, the gatekeepers are basically Amazon, Google, Facebook. And after a certain revenue number, they make it very, very prohibitive for Indian consumers to, Indian brands to get to their consumers in a repeated fashion. Data is not available to the brands. Data is controlled by these platforms. So I think, I don't think there is a problem of demand. I think there's a problem of discovery, and that problem can be resolved if either more sort of channels are available to brands to reach consumers, because ultimately business has to make sense and it has to be cost effective. If you're spending all your money trying to get to the consumer, there's no point in making that sale.
Absolutely. And why have you picked consumer products as your sector focus?
Like I said, India is a very underserved market when it comes to consumer brands. And India has a growing aspirational, consuming class. And they do want to, consume where they can trust the attributes of that brand, which is what a brand really is. Second is that it's not a winner takes it all category the way technology is. And third, I think these are very tangible products where, the COGS is understandable, the gross margins are well established in the business. So you're dealing with really real dhanda, if I may say so. I mean, this is not something, you don't have to educate somebody how to eat a packet of rusk or, how to drink coffee. The consumer is already doing all of it. Now, the question is the consumer being served currently, either by the unorganized sector or by certain brands which may not fully understand or connect with the consumer the way the consumer is evolving today. So I think it's consumer businesses in India can be built in a fairly cost-effective way. And mortality in these businesses is a lot less because, like I said, the consumer behavior is already there. Then it's a question of, for the brand, this particular startup to figure out their pricing, their channel, their distribution sort of network, which is a lesser of a problem to solve. In technology, I mean, founders are solving at a very core level that does somebody out there even want that product?
Right.
And adoption of that product may or may not ever happen.
The reason I asked you this is actually, the way you go ahead and select your companies, your portfolio companies, and also the focus area of consumer products is because consumer products, by definition, is a crowded space. So isn't it counterintuitive when you are actually selecting a very crowded space as your focus investment?
It's actually not crowded at all. If you go into each category and, if you, like we, study every category before we go into it to make an investment, you'll realize that often in India, a lot of these categories are being served by the unorganized sector. So there's a large addressable market, but most of it is taken by the unorganized. And like I said, consumers today want to be able to trust the products that they are buying. They want to be able to also talk about, some of those product attributes, and everything that is being promised on the label is actually there. So it's not crowded actually. And if you look at even a mature market like the US, I mean, there's no market more crowded than the US market. And you look at the number of consumer startups there which have done really, really well. So every market always has space for, more players. It's about how smart the founder is to get that space for their own sort of company and brand.
Absolutely. You describe Rukam Capital as an India-focused, early-stage consumer products fund. You like to be the first institutional check into a company. You have invested in beverage, confectionery, personal care, and packaged food startups. How do you find those companies that are looking for their first institutional check?
I think, we go out very actively and talk to founders very actively. I think there is a there is some sort of, till recently there wasn't that much institutional capital available at early stage. I mean, this is something that's really happened in the last 4 or 5 years, where micro VCs and smaller VCs have come up who are willing to write smaller checks. And I think founders have to, sometimes take the decision that do they take angel capital or do they take institutional capital. And what I can say about institutional capital is that because every VC has to return money to their LPs. So we tend to work very, very hard to help get the next round of funding. And we try and avoid mortality in our portfolio because we are constantly answerable to our LPs, to the regulator. So we are very, very conscious and cautious of every investment that we make. Whereas an angel typically writes, very, very small checks. And while they are valuable and important in the ecosystem, the entire mooring is very different.
Right.
So I think for a founder who is really serious about building a big business, I think it's good to have institutional capital very early in the journey. It helps you also become a better run business because we do focus a lot on processes, compliances. We insist on financial controllers into the company, stat audits, internal audits, which typically a small company doesn't really think about too much.
Absolutely. And on an average, how many startups do you evaluate in a quarter? And of these, how many do you actually end up investing in?
The job of every investor is to actually say no.
Yeah,
The job of every investor is not to say yes. So the unfortunate truth, again, we are a undercapitalized country. There isn't enough capital available, unfortunately, in India for founders. I think there are lots of very, very good founders building very good businesses, but we are all sort of limited by how much capital that we all sort of control and have access to. So typically that ratio is pretty poor, I must admit, and that's true for all VCs, and it'll be true for even angel investors because there's just such a huge pool of talent of founders who are trying to build interesting companies. So that ratio tends to be pretty poorly skewed towards the founders.
And how many do you evaluate in a quarter, on an average?
It's a very large number.
Very large number. And
Yeah.
how many
So I think in a year we would end up seeing maybe about 3,000 companies.
And how many checks do you cut out in a year?
It could be 5, 6, depending on, whether they meet our, what we feel about that category, what we feel about the founder. I think just as a VC has to generate trust with their limited partners, founders have to generate that trust with VCs. I think for any investor, it's important to be able to trust the founder more than even what the product that they're building or more than even the category that they sit in.
That's right. So, and this is an aspect that stands out when you invest, because you invest more in the founders rather than in the companies initially.
Only in the founders.
Yeah. And so what's behind this approach? What do you look for in founders that makes Rukam interested? How do you go about assessing their motivation and their capabilities?
So, I think this is what is the toughest job for an investor, because I think some VCs try to do a psychometric test. Sometimes, of course, we all ask all the relevant questions. We go through business plans. We try and understand how they've thought about the product. Why did they start up? So these are some of the, basic questions that I think all investors, including us at Rukam, we ask founders. I think we're looking for that sort of absolute long-term commitment. We're looking for an ethical sort of founder, because fraud is a real problem in the early equity space, because we give capital to founders for equity, so there's really no recourse if that money goes down to zero, right? Because it's not like debt that we are getting there's a coupon rate and that we are getting that money back, So I think trust is very, very important. And I think like with everything else, practice makes you perfect. So it's about how many founders do you meet and how often do you speak to founders. Also, how much, if you spend more and more time with your portfolio founders, you learn to spot those traits that lead to somebody really building a large company, because building a large company requires immense amount of both mental and physical stamina. It's not just about, the product market fit or just about financial sort of genius. You could be very good with numbers. You could be very, very good with a lot of things, but you could just tire because it's such a struggle and it's very, very hard to build a company in India.
How much have you invested so far in terms of value?
We've invested quite a bit, so we don't typically talk about specific numbers. But the fact that we've done 18 companies should give you, a rough sort of back of the envelope number here.
Any mistakes that you regret in the early stages of investment, in the early life of Rukam?
I think the early mistakes are always people mistakes. When I say people mistakes, it means that you judge the founders incorrectly. I don't think there's a category issue per se in India. I think given the size of this market and like I said, the fact that our middle class is growing at probably, one of the fastest pace globally, allows you to build many different kinds of companies in India.
Right.
But I think it's founders, if they don't have the right sort of DNA, or if there's an ethical sort of if they don't understand there's a very clear investor founder relationship, which I think sometimes gets misused. And I think those would be mistakes for any investor, because it's very hard to tell when you're judging a founder at the early stage whether they will do the right thing by the investor. So it's not just about whether the company goes down or not. It's about whether the founders understand and do the right thing by their investors, even when they're going down.
Right. And have there been any experiences where you'd rather take decisions differently now in hindsight?
Of course, always. I think, like I said, entrepreneurship, and I'm an entrepreneur of this fund, is that you always take decisions which, with imperfect data.
Yeah.
And there isn't really a well laid out playbook that exists, right? Because every situation is unique and you've got to really take a decision at a certain point. And we work with a lot of consensus because, again, investing is a consensus driven business. It's not a very individualistic sort of a business where, it's my way or the highway kind of a business. So you try and, arrive at a consensus when you take especially big decisions, which investment decisions are big decisions. But yeah, sometimes you do, of course, you always make mistakes.
And you talked about the relationship between the founders and the investors. And the strongest edifices of this relationship probably would be transparency and trust in your book.
Absolutely. I think because the whole VC industry is very nascent in India, and I think founders have not fully, understood how this relationship really works. I think there is nothing more important than, being more open and transparent. There are going to be good days and there are going to be bad days. There are going to be good years, there are going to be bad years. And for us at Rukam, we don't abandon founders just because, there's been some, the last 3-4 years have been very, very challenging, even for large businesses.
Right.
So for small businesses, you can imagine how bad it's been. So we are happy to support founders through thick and thin. But yes, it is, of course, dependent on how transparent and free flow of information there is between investors and founders.
And what are the key ingredients of your success?
Well, I don't think I'm a success to begin with. But I think it's the ability to take risk. I would say calculated risk, because you've got to be a little paranoid as a founder yourself.
Right.
You've got to constantly think about what could go wrong and try and mitigate it as much as possibly you can. And you've got to help founders, within your portfolio also understand risk. I think sometimes you can get carried away and think that, life is always going to be rosy. But, if you've seen a few summers, life is rarely rosy or linear. So it's about being a little paranoid and being extra careful, but at the same time, willing to jump out of the window if needed.
And finally, VCs also have the pivot moments, don't they? Both in terms of scaling up and also bigger checks, giving bigger checks and also diversifying your portfolio. Is there a pivot plan for Rukam too?
So Rukam is already a pivot. Like I said to you when we were discussing earlier, we were actually an accelerator. And when we realized that founders don't want any GAN without, capital attached to it, we pivoted to becoming a fund. And I think that was the best decision, because ultimately capital does make a difference, in the early stages of a company's journey. I think our next pivot is likely to further see what are the opportunities. I think there is a big gap at Series A. There's not enough capital available. So if you see, there's a lot of mortality after the early stage check in India, because a lot of the capital sits at Series
Series
B.
A. Yeah,
Series B. There's really not enough. So a lot of founders get invested at early stage, but they're not able to reach that scale to get Series B and skip the Series A part completely. So I think there's a little bit of gap there in the Indian market, and I think it's an opportunity which I think a lot of early stage investors are looking at quite keenly and trying to bridge, and hopefully so will we.
Is there a plan to diversify beyond the consumer goods sector?
I think diversification is a function of how we see the market. So I think every investor, while you have your own thesis, but you do see what the opportunity is. And if the opportunity is close to your sort of core, of course you take it. And again, we've seen this in businesses over centuries, that businesses pivot all the time. I mean, Nokia was not a software or a hardware company, So the truth of business is that it has to change, it has to respond to the market. And the VC business is not any different, and you have to be attuned to how the market is changing. So I think some of my early skills of a writer is that you try and spot an opportunity before it becomes mainstream. So it's to understand the difference between a niche and a trend. So we want to capture niches, not trends.
Absolutely. Thank you, Archana. So very well put, to understand the difference between a niche and a trend, and you want to be on the side of niche rather than be on the trend side. Thank you for sharing these very deep insights about venture capital, about entrepreneurship, and about your own personal journey.
All right. Thank you.
Bye.